Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. So this video is about what you should invest in. Generally, it's a personal decision, and I'm going to point you to look at my asset allocation video. But I would like to go over the various items you could be investing in, and maybe that will help you pick a little bit better for yourself. So there are different options to choose from, and you can definitely mix and match depending on what you want your portfolio to do and not do. So the first thing would be cash equivalents, such as a term deposit or a guaranteed investment certificate, savings account, money market funds. They're generally safe but low returns. The next big one is stocks. This indicates ownership in a publicly traded company. You can expect price appreciation and or dividends. Depending on what you choose, you can just have the stock price grow, or you could have some growth but also have the company pay dividends. The dividends is money from the company's profits being passed to the shareholders. The next big asset type is bonds. These are loans to companies or to government entities. They're frequently called fixed income, and you get interest payments. They pay a regular coupon payment as interest, and all other things being equal, they're going to be safer than stocks. So for example, a Ford bond is going to be safer than a Ford stock in terms of volatility. Bonds can range from the highest quality rated AAA to the lowest quality rated D. Investment grade bonds, those that have low risk of default, range from between AAA to BBB minus. Conversely, high yield bonds, i.e. high risk bonds, usually have a rating of BB or lower and are commonly referred to as junk bonds. If interest rates go up, existing bonds will have capital losses. That is, they're going to go down in price because new bonds have a higher interest rate and the old bonds need to be discounted when traded to make up the difference. The opposite happens when interest rates go down. Now let's look at the bond yield curve. A bond yield curve is supposed to be upward sloping. A normal yield curve is upward sloping curve, shows that the longer term bonds have higher yields than shorter term bonds due to the higher risk of long-term bonds. The higher yield reflects the investor's expectations that rates will rise in the future, and of course your money is at risk for a longer period. Now, an inverted yield curve is a downward sloping curve which shows that the yield on short-term bonds to be higher than long-term bonds, and this suggests that investors expect rates to decline. This can be a sign that a recession is forthcoming, and it also indicates that banks may be lending less because they pay interest to savings account holders on the short side of the curve, and they collect mortgage interest on the long side of the curve. And finally, a flat yield curve shows that short and long-term bonds are receiving almost the same return. It usually indicates the market is in transition, trying to determine the direction of interest rates. When the curve moves from normal to flat, this can signal an economic slowdown. The next big asset type is real estate. So this can be rentals, flips, rent-to-owns, and a few other types of ways of making money from real estate. I've done previous videos about real estate investing, but just to summarize, real estate is less volatile on the average than most other assets, but can definitely go down in value, as happened in 2008 in the US and is happening in 2022 in the US and in Canada. Some people can collect rental properties, live off the proceeds, pay down the mortgages, and then 20 years later, the mortgages are gone and the rents add up to a significant amount from the 4 to 5 houses that people usually max out at. A typical real estate appreciation is about the inflation rate over the long run, so 3%, let's say, and rent after costs might net you 4%, so you should expect high single-digit returns from real estate. The next big asset type is commercial real estate. So this can include mini malls, apartment buildings, office buildings, anything where you are getting tenants that are professionals as opposed to residential. The price for commercial real estate is based entirely on the revenue. It doesn't matter whether it's in a nice area or not. If you can make the rents go up, you can make the value of the commercial real estate go up. Couple of notes is that purchases tend to take a very long time. You have to do an environmental study, a traffic study. There may be all sorts of things that City Hall may require you to do. And these transactions always require deep pockets. Everything costs a lot more. If a hot water heater on your rental residential property costs $700, your apartment buildings is going to cost $20,000. So just be aware of that. The next asset class is commodities, so metals and minerals, oil, gold, copper, etc. They're generally needed for some type of industry and they have value, but the value is determined by the market and can be quite volatile. Next class would be collectibles, which would be anything from classic cars, stamps, comic books, baseball cards, art, Star Wars toys in original packaging that you did not play with, and anything else that somebody finds of value. Obviously, there's no intrinsic value, so everything's worth what people are willing to pay for it. Next asset class is private debt, which is lending money to people, either directly as a hard money lender with, let's say, real estate as a collateral, or through a website. There is obviously some risk to this with people creating accounts on these websites and just leaving with the money. So you definitely need to diversify and be careful. Some people enjoy currency trading. This is trading on bets of movements between currencies. So you might think that the Canadian dollar is going to get stronger compared to the US dollar, and so you purchase Canadian, and that way you make money compared to the US dollars. This includes a lot of leverage and can make you or lose you a lot of money, so it is a risky endeavor. The next asset class is just generically called alternatives. So this could be private equity, angel investing in private companies, or specific projects. I've done a video on the private equities and angel investing previously. Whether this is business or real estate related projects, that all depends. Because the information provided is often limited, this can be quite risky. You won't know that something's going wrong until the payments stop dropping into your checking account. The next asset class is futures. Futures contracts are intended to solve the basic business risk of future price uncertainty. With futures contracts, investors can control as much of the future as possible, in that the contract can set a predetermined price for a good that is to be delivered at a specific time in the future. This is typically what is used for commodities trading like gold and oil. Next, we have options, which are contracts which you can buy or sell. They're puts or calls, and you can use them to generate cash flow or make bets on the direction of stock movement. There is an increase multiple of return, but you could also lose all of your money. So it is not for the faint of heart. Kind of a grouping of the previous assets is mutual funds and ETFs. They're baskets of any of the above assets with diversification instantly built in. They may be actively managed by a portfolio manager, or they could just follow an index or a formula. These last two would be something that I would recommend for beginning investors. It's very difficult to lose all of your money with mutual funds and ETFs, but you could certainly lose some of your money. So that covers the different asset types commonly available to investors. You can choose the ones that you like and invest in them yourself. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.